Welcome, guys, to a new session of financial accounts. We'll focus on partnership accounts. Before we go into the whole calculative aspect of partnership accounts, we need to understand the theoretical aspect of partnership accounts. Now, first, we need to go into the definition of partnership accounts, type of partnership, type of partners in a partnership, formation of partnership, and the partnership agreement. So in the definition of partnership, partnership is an association that brings the talent resources of two or more people together to carry on a business. Now, partnership is the association or coming together of 2 to 20 people who agreed to go into business with the aim of making profits. Now, these 2 to 20 people pool their resources together. Now, these resources can be financial or mental or any other resources, as long as it contributes to the establishment of the business. Now, we have types of partners. Now, first is the general partner, we have the limited partner, we have the sleeping or dormant partner, we have the nominal partner, as we have seen in our text. So general partner is an active partner that participates in the day-to-day operation of the business. They are the ones that make sure that the managerial activity of the business, they are in charge of it. So we have the limited partner. Now, this partner is the partner that pays off liabilities. Now, the limited partner only pays liabilities to the extent of the amount that he agreed to pay. He cannot be like, if a partnership business is in a large liability, he won't be liable to pay all the large liability. He is only liable to pay the portion of the liability, not all. The portion is like an agreed amount that they all agreed before the establishment of the business. We have the sleeping or dormant partner. Sleeping or dormant partner only contributes his resources to the business. He does not take active part in the business. Now we have the nominal partner. Nominal partner only contributes his name. It can be that the nominal partner has goodwill or is a famous person or a person of high esteem in the society. So he or she contributes his name in order to increase the sales or the public recognition of the business. So now let's dive into formation of partnership. Now, for a partner to be formed, they need to register the business name with the Corporate Affairs Commission of Nigeria. So in registering partnership business, the form which the Corporate Affairs Commission will issue to the partners must have the name of the partnership. That is, the partners will have to impute the name of the business, the general nature, what's the business all about, what are they dealing with, are they manufacturing or are they selling, or are they just rendering service, what kind of service are they selling, what kind of product are they selling. That's the nature of the business. And we have the general place of business. Where is the business located? Is he located in the east, west, north, south of Nigeria, or is he a foreign business, or where is he located? So we have the name or former residence. Or the business has a former name, or does it have a former address before there was a new address? So we also have the date of commencement. When did the partner want to start operation? That's what commencement of the business of partnership. That's what the commencement is all about. So move on to partnership agreement. Now, before partnership business can be formed, there must be an agreement among the partners. Now, these agreements are conditions that the partners must agree on in order for the business to be formed. Now, first condition is the capital. Now, capital deals with the amount of resources that each of these partners are to contribute into the business, whether it's going to be fixed or fluctuating. Now, when it's fixed, it's like a fixed amount that each of them will pay. Fluctuating is like it is not fixed. It varies based on the economic or the financial capacity of each partner. So we have profit sharing ratio. Now, profit sharing ratio is an essential condition in partnership agreement because it gives a ratio or proportion of how each partner's profit is going to be. We have interest on capital, interest on loan. Now, interest on capital drawings and loan. Now, these are interests that have been placed on the capital or loan, the capital that the partners put into the business, or the drawings that the money that the partners takes from the business, or the loan that the partner gives the business, or the one that the business gives the partner. Now, there must also be an agreement that the drawings should be limited, or should be limited, like that. This deals with like the amount of money that the partners are taking from the business should have a limit. It should not be limitless. That's another condition. Now, the other condition is that the active partner, that is the person that takes part in the day-to-day operation of the business, is he entitled to a salary? If he's entitled to a salary, how much should be the salary? So we also have how the books of accounts should be kept, on how it should be recorded. Now we have the method of valuation of assets. What method are we using to value these assets, whether fixed assets, tangible and intangible assets? How are we going to value the assets? Now we have a method and procedure of settlement of debt. Now, in a case where there is a conflict, how do we settle debt? Is it by court, or is it by negotiation, or any other way of settling debt among partners? We also have the condition for admission of new partners. How do we admit new partner? What are those criteria that we need to follow before a new partner can come into the business? Now, these are all partnership agreements, and there's a lot of partnership agreements. So in a case where in the long run, when if the partners agrees to change one of these conditions, it's also possible. Thank you, and make sure you subscribe, like, share, and if you have any question, please do well to comment. Now, the calculative aspects will be explained or will be solved in our next video. Thank you very much.